Hello and welcome. I am Simonia Ridley Blassingame. I'm the president and CEO of the Forsyth-Monroe County Chamber of Commerce. Delighted to be with you to bring another chamber chat conversation. As you know, we started this post-COVID-19. There were just new things that were popping up that we thought would be valuable discussion items for our members. And so from time to time, we have invited guests to come on and share quick video information for our members. Today we have with us Mr. Josh Rogers. He's the president and CEO of Newtown Macon. He is a valuable asset, has been in the Middle Georgia area doing great things for businesses in the Macon area. I heard him talk about this at a webinar about a week or so ago and thought it was great information for our members. I've been reading about it in the CARES Act, but had not heard anyone yet talk about it. And so he's brave enough to come and share his information with us. We also have with us Mr. Nick Morgan, who is a chamber board member, but he's with Black Oak Asset Management. And so he has the financial brain and will probably have some valuable insights for our members that have questions about this offline. So gentlemen, thank you both for joining me today. I appreciate you more than you know. I kind of want to turn it over to Josh real quick and ask you maybe who would this be appropriate for? I know in your previous webinar, we talked about a comparison between the ERC or the Employee Retention Tax Credit, ERTC, and the PPP, which is a payroll protection program. But let me know what you think about who's best suited for this program.
Well, yeah, so I want to flip through a few slides and give people 5 different examples from businesses in downtown Macon that we've worked with. I've made their data a little bit anonymous, but I think walking through those examples will show you pretty easily how to make the decision about which is the right choice for your business. Early on, we thought the ERC was not going to be a good option because we were just doing quick math. And it looked like the amount of cash you'd get from the PPP was always going to be more. And that is generally true, but now we've found a lot of reasons that the amount of actual benefit is going to be more with the ERC than it is with the PPP. So if you don't mind, I'll go ahead and launch into my slides and we can look at some of these examples. Or
that would be great.
Okay. It's amazing going through this, how challenging it is for an entrepreneur to be able to figure out what to do with all these complicated tax programs, and especially because they were written so quickly without doing a whole bunch of modeling about how they were going to apply. So just to give you a quick intro on the Employee Retention Credit, the qualifications to get this credit are a little bit different than the PPP. So there really are 2 basic qualifications. Number 1 is you have to be a business, but you can be a nonprofit or a for-profit. And we talked about earlier that that 501c3s were the only category of nonprofits that were eligible for the PPP. So this program reaches into more sections of the 501 code than the PPP did. So, I mean, that's one of the first things is there are a lot more businesses that are qualified for the ERC than the PPP. The second thing is your revenues have to have dropped by 50% from the pre-crisis level, or you have to have been partially or fully ordered to close. For example, Newtown Macon, we run a co-working space, and we were required to close that. So these standards apply for calendar quarters. So as long as you meet both the standards during any calendar quarter, then you qualify for the retention credit during that quarter. Now, everyone's pretty familiar with the PPP. So I'm going to compare and contrast these a little bit. The Employee Retention Credit covers half your employee's wages up to $5,000 per employee. That is not a quarterly limit, that is a total credit limit. So as long as you meet one of these conditions, you can claim the credit in more than one quarter up to that maximum of $5,000 total per employee. It's paid through a tax credit, and the way you get it is you obtain it from your withholding, or there is a Form 7200 and you can actually get a rebate where they just issue you back cash. So there are a lot of advantages in the application process here because there is no application process. You're able to do this, take advantage of this credit by making a transfer from the payroll taxes you would have paid to the federal government. So all of this is happening within money you already have the discretion over. So, I mean, that's a big contrast with the PPP. As anyone who has applied, I mean, lots of our businesses have applied 12 different times, you know, to 12 different lenders. So this one, there is no application process. You do this with your tax professional yourself. Now, as we talked about earlier, the payroll protection program covers 100% of wages for 2.5 months, which seems like a lot more money, but it's paid through a forgivable loan. So there are a lot more qualifications about how you can qualify for forgiveness. And I think people are still a little bit confused about how to maximize that forgiveness. And you have to obtain it from a private lender. So there's an application process, there's a loan closing, there's a lot more process involved with the PPP. So basically, the PPP requires you to rehire 100% of your employees for the 8 weeks as soon as you get the money. And you have to pay them at least 75% of their previous wages. So you have to use 75% of the total loan on those payroll costs. And the remaining 25% you can use on rent, utilities, or mortgage or business debt interest, just the interest. So you may be starting to see how this is creating some problems for some businesses. The ERC funds half your employees' wages during any quarter you meet one of the criteria, that is 50% of your previous revenue or partially or fully ordered to close. You max out the credit at $5,000 and you convert the payroll taxes to operating funds to pay yourself the credit. But you can only get one or the other. Now, one good thing that the SBA just clarified this week is if you already have gotten a PPP, but you decide that the ERC is a better option, you can pay back your PPP before May 14th and qualify for the ERC. So that's really important to know. If you've already gotten the PPP, but watching these slides, you figure out that the ERC is a better option, you still have a chance to take advantage. So here's the first example. It's a nonprofit organization. Their payroll is $600,000 annually with 10 employees. They were partially ordered to close, but everyone is continuing to work. So they haven't furloughed anyone yet. So if this company did the ERC, their employees are averaging $15,000 a quarter. So half of those wages would be $7,500. So in just this quarter, they will max out that credit of $5,000. So with 10 employees times $5,000, they could get a $50,000 benefit from the employee retention credit. Now, on the other side, PPP is 2.5 times 2.5 months of payroll. So in this case, that's $125,000. Now, here's a really important point. You can only be forgiven on either the PPP or the EIDL. And in this case, this business did get a $10,000 EIDL advance. So you have to subtract that from the PPP. But the total net benefit is $115,000 for the PPP. In this case, this organization is continuing to function and they have all their employees still on payroll. So there's really no downside to them doing the PPP. Businesses that would have challenges reopening right now or are not going to be able to use all of their staff, like a restaurant, that's going to be totally different math, and we'll cover one of those in a minute. Our next example is a for-profit sole proprietor. So this could be a retail business or a bake shop, somebody who only, the owner is doing all the work. The owner pays themselves $60,000, but they're doing that through owner draws. So they're paying expenses from the business. The only thing they really have to back up how much they're paying themselves is their Schedule C. And the owner's already taken pandemic unemployment, that $600 a week payment. In this case, the employee retention credit is not going to be an option unless they're using a professional employer organization. We can't figure out a way, because this requires you to use your quarterly payroll tax forms to qualify for the credit. We can't figure out a way for a sole proprietor to take advantage. So in this case, even though the PPP is a really small benefit, only $11,500, that's still going to be more than the employee retention credit because the employee retention credit is not available. Our third example is a for-profit restaurant group. their annual payroll is $2.5 million and they have 75 employees, but they're fully closed. And now the law has changed so they could reopen. But if they do reopen, they're expecting to do about 20% of their previous business, which means they do not need 100% of their employees back. So in this case, their employee retention credit would be, on average, their employees are making $33,000 a year. That's $8,300 a quarter. So half that's about $4,200. So they're going to get $300,000 from the employee retention credit. The PPP, again, at first blush, seems like a lot more money because it's going to be $520,000 because it's 2.5 months, that total payroll. Even less the EIDL of $10,000, it's still $510,000. But the PPP requires this restaurant group to spend all the money, on payroll the 8 weeks as soon as they get the money. And there's not enough work for everybody to do. So this business would have to rehire all their employees, even though there's no work, and those employees would be getting less money than they're getting right now on pandemic unemployment. So there's definitely a cost to that too. That if you're costing your employees money, that's going to be a problem down the line. It's not good for morale. So really, when we're looking at this example, the only benefit is the 25% of the PPP that can be used on utilities and rent and interest. So it's really not $520,000. It's $120,000. So in this case, to me, this is a clear-cut example where the employee retention credit is a better program for this business than the PPP. Again, it looks like the PPP is more money, but when you actually look at benefits to the business when they need it, the employee retention credit is going to provide more than double the benefit. The next example is a for-profit with 3 employees and $60,000 payroll, and they are required to remain closed. So in this case, their employees are all 1099 independent contractors. This is something we've run into. It's extremely common. And so the only person who's running on payroll is the owner themselves. So they're paying themselves $10,000 a quarter. So they're going to get the full $5,000 just for themselves. If we look at the PPP side of it, they'd get $8,200. But they got the EIDL for all 3 of their self-reported employees. So there's only a benefit of, there's a $500 difference between these 2 in this case. So again, because of the hassle with applying and complying with the PPP, we advise this business owner to do the ERC as well. The last example is a for-profit business. This could be like a coffee shop or a small restaurant operation. Their annual payroll is $108,000 with 11 employees. They were already awarded their PPP on April 28th, but they're not planning to partially reopen until June 1st. And so in this case, we looked at their average employees making $12 an hour. So they're only going to, if they do the ERC, they're only going to get half that payment as a benefit. So that's $1,400 per employee, a total benefit of $15,000. But the PPP is only $22,000 minus the EIDL of $10,000. That's only a $12,000 net benefit. So in this case, this is another example of where the ERC is easier. It will be timed better, and it's going to provide them more money. So those are the few examples that we've gone through with the businesses that we've talked to so far to kind of illustrate some of the different scenarios where businesses really need to think about which of these programs is going to benefit them more.
Wow, thank you, Josh. That was really amazing. Nick, do you have any thoughts you'd like to share about the slides we just saw?
Yeah, no, that's excellent. He did a great job with the illustrations. Maybe I'll come back to the hurdles that you have to go over in regards to the paperwork or requirements. I think you did a great job of mentioning that, but it sounds like, and can you confirm or elaborate more on the ERC appears to have less hurdles or less qualifications or less amount of paperwork that you're going to have to submit to the IRS. Is that what I'm understanding?
Yeah, I think it's undoubtedly true. Really, the only trick to the ERC is if you need a refundable credit. If you need, that would be an instance where the amount of your ERC is more than the payroll withholding that you would owe to the federal government. And that's a case by case thing. If that is the case, you do have to fill out I think it's form 7200. So it's a brand new form to claim the credit. Otherwise, you're able to do this on your quarterly payroll reporting. So it's not really any extra work than you're doing already. Definitely incomparably less than the PPP is, especially with all the uncertainty about what future reporting is going to be required to qualify for the forgiveness.
And that's what I'm hearing.
And one of the things, yeah, one of the problems with the PPP is they're saying, okay, you're only responsible for the guidance that the SBA's issued through the date that you got your money. But the SBA keeps issuing new guidance every couple days. And so, I mean, it's really complicated to pull the FAQ with the date that's the right date for when you got your money and make sure you're doing that set of regulations. It's just, that's a lot. The ERC is much less dynamic. The IRS is not issuing new regulations or guidance about the program. They've got a good FAQ on the IRS site, which I'll put into the chat box. And it's pretty comprehensive already. And even if it's not comprehensive, it's at least not changing.
Right. And so let me ask, it sounds like the ERC is really beneficial for small business owners. What is the max number, if you will, or what's kind of the sweet spot in terms of number of employees? I think the most that you mentioned was 75.
Yeah. You know, so thinking about the higher end of these things, I don't know. We've not really tested it on businesses that have more than 75 employees. That's probably our biggest group in downtown Macon. There's not a cap on the, you know, there is a cap on the ERC, and I believe it's about it's at 100 employees when things start to get more complicated. One of the things we tried to do, so there are really complicated regulations on the ERC about establishing your 50% drop. So if you try to qualify under the 50% revenue drop, it's more complicated. But if you are partially or fully closed, that's super easy to document. So I've just not gotten into any of the 50% revenue drops. And the other thing's the employee limits. So yeah, I mean, you're right. The PPP goes up to 500 people. And even then there's it's a real squishy limit at 500, right? There are lots of ways for businesses with more than 500 employees to still get the PPP. But yeah, it may be really important to point out is if you're in the 100 to 500 range, the ERC is probably not an option for you.
Okay.
Wow, this is really good information, Josh. I have lots of ideas, and I think our business owners will really appreciate having the comparison in the slides to really think through this more thoughtfully. Any closing remarks or thoughts that from either of you that business owners should maybe consider, or where should they go? You mentioned the IRS website, but what other resources are available? I imagine their CPA or accountant would be
yeah.
So over to you, Josh.
Absolutely. If you've got a tax professional, an attorney, or a CPA, you should definitely turn to them for advice right now. We cannot give tax advice, but we are available for free consultations. So our website's newtownmacon.com/COVID-19, and we're offering free one-on-one and group training classes to everybody in Central Georgia, thanks to the COVID-19 Response and Recovery Fund. So if people need to talk to us, we'd love to chat. And yeah, absolutely. I think it always helps to be an educated client. I'm sure, Nick, you'd agree that the more work your client does, the better you're able to help them, right? So I think if you can at least prompt your tax professional with some of these questions and fill them in on what you're thinking about, it's going to help them help you.
Great. Nick, any closing remarks from you?
Final question, and he did a great job clarifying this. If you're an S Corp, a C Corp, an LLC, right, then it's worth having a more informed discussion or having a comparison between the two, ERC and the PPP. Whereas if you're a sole proprietor, you may be better off applying for the PPP or the EIDL.
Yeah.
Go ahead. Yeah, your thoughts.
Yeah, no, I think that's absolutely right. I mean, we really dug in because some of our sole proprietors would like to take advantage of the ERC, but you got to have that. You got to have payroll taxes that you've been paying quarterly, and you've got to have. There's no mechanism for a sole proprietor to take advantage of the credit, whereas there is on the PPP. The sole proprietor is going to be limited to the PPP. We even looked into, could you sign up for a professional employer organization now, sign up for a PEO now? And I just don't think you can thread that needle. So that's where we came down on it, is it's just not possible.
And maybe this is a great way to conclude. If I'm correct, and please correct me if I'm wrong, the PPP is with the Small Business Administration. You've got the IRS and the SBA. The ERC, is that with the SBA?
No, entirely with the IRS.
Right. So that's why you want to see a fiduciary. That's why you want a CPA or tax attorney or some type. Yeah.
You got it. Yeah.
Wow. This is a really great discussion. I think we have certainly set the stage. Can you give us the deadline again, Josh? If you apply for the PPP and now decide that it's no longer right for you, what's the deadline again to repay those funds?
May 14th.
Okay, so about a week.
Yeah, if you send money back next week, they are not going to consider you to have ever gotten it.
Okay, perfect. Thank you. That's important. For those of you interested, we are recording this on May 8th. So this is in advance of that deadline. And however, if you end up watching this video post May 14th, we're sorry. We're getting this out to you as fast as we can so that you can make those corrections. So again, gentlemen, thank you for your time. I appreciate you. Please stay safe and have an enjoyable weekend. Thank you for your time.
Yes, thank you. You as well.